So once again, welcome everyone to the Crypto Valley Association virtual series titled Tokenization, the Next Wave of Mass Adoption. So I'll be your host this evening, and we'll be moderating an extraordinary panel of industry leaders. So we have Stefan Meyer, co-founder of FQX, Patrick Stettler, head of sales EMEA of STX, and Klaus Scanning, CEO of DigiShares. And of course, none of this could be done without the support of our very own co-executive director, Nikki Zani, who's in the back end here helping us coordinate everything as well. So we have just under an hour. So I propose we just dive straight in. I'm sure everyone is joining slowly but surely. So let's kind of get started. Maybe Stefan, if you'd like to kick us off today, and you can provide a short introduction about yourself, what got you involved in the digital space, and maybe a little bit about FQX as well.
Super, thanks. Happy to do so. So I'm Stefan. I'm sitting at the moment on the Mount Rigi. I hope the connection is nonetheless fine. I'm based usually in Zurich. I'm an attorney at law in Switzerland. I've been working a couple of years in the insurance industry, and then I moved back to academia for a PhD on blockchain and securities law. So how can you optimally tokenize assets from a legal perspective? And I completed this 2019. And I've been working now in the meanwhile 5 years with MME's DLT team, also mostly on tokenization projects, from blockchain-based equity to derivatives to kind of real estate in Dubai. So quite a broad range. And as of 2019, I co-founded together with 3 colleagues FQX. So we're a Swiss-based, but now in the meanwhile, a global company with around 25 employees. And we are focusing on one of the most traditional and standardized debt instruments, so the promissory note. And we have built an integrable so-called e-note transaction engine, allowing to create those instruments. And this e-note transaction engine can be integrated into any financing platform. So we have now, meanwhile, for example, a leading European money market platform having integrated e-notes, a new crypto stablecoin lending platform. And then in very short, it usually always works in a similar manner. So you have negotiation on a financing platform. As soon as the parties agree to a transaction, and it's very similar to a PayPal checkout. So with the only difference that the result is you issue a tokenized so-called e-note. And this e-note can then be stored either on a DLT or if, for example, within CSDs. And here we are working closely together with specifically STX. And we have a very nice and promising model how you can then bring those e-notes into STX. Maybe as a last remark, but then I've already talked a lot. I'm also I'm lecturing at 2 Swiss universities on the intersection of blockchain and law. I'm leading at the University of Lucerne, the master course on blockchain and smart contracts for the law students, and then also from time to time at ZHW and HWZ. And with this, happy to hand over to my colleagues.
Stefan, thank you so much for all of that, and really looking forward to discovering more about the e-note and also your collaboration with STX. Maybe that's a good transition. Patrick, if you'd like to tell our audience a little bit about yourself and of course the company.
Yes, thank you, Sheraz. Patrick Stettler, my name. I'm with STX now for 3 years. I have a background in capital markets for 25 years. So you see, and I've got some gray hair. That means I've been here for a while. So I'm actually one of the traditionalists, as I would call myself, but at the same time, I'm a very curious person, and I believe in actively shaping the future. So I always believe that what brought us here won't bring us there. I was in trading, market making for many years originally, and I in my time in capital markets, I was also in sales and structuring for quite some years. And during that time, I was also involved and actually co-building and co-architecting several platforms around investment structuring and automation. And I was always a strong believer in doing things better, faster, cheaper, or actually more efficient to get better qualities for clients. Then, at some point in time, I just realized that the technology part of thing was going to change substantially with the advent of the DLT blockchains So I strongly believe that these new technologies will, over time, not very easy to predict how quickly and in what sequence, but these technologies will change the way banking, the capital markets work. And therefore, I was joining SDX 3 years ago because I thought that's really a key project and a key endeavor. And therefore, at SDX, I'm very happy to be there. I'm heading the sales and relationship management team. And I have the pleasure and honor to work with capable people like Stefan and his team and his group. And we see a lot of things, and I'm very happy to, let's say, represent one fragment of the entire market, which is so big and so colorful and dizzying. So happy to be here. Thank you.
Of course, well, thank you, and hopefully we get a chance in this hour to explore some of those colors as well. But before we do, Klaus, please, if you would like to introduce yourself as well.
Yeah, great pleasure to be here today, and looking forward to the discussion. My name is Klaus. I'm the CEO of Sheraz. I also have a background similar to Stefan. I was a researcher to begin with. I have a PhD in computer science, but I went into business quite soon after that. I wasn't so happy in academia, so I joined Hewlett-Packard, HP, for some years as a kind of technical lead on a project, and took that to become a spin-out of HP, and was the CEO for that for more than 10 years. And that sort of became my first company and my first exit. And then since then, I've started another 3 or 4 companies, and ending with this company, Sheraz, founding that around 4 years ago, and taking it now to around 30 employees and quite good business traction. So I bought my first Bitcoin in 2014, and that was sort of my entry into this space here. I think I paid $200 for it or something like that, and I didn't tell my wife because I was afraid she would think I was a complete fool. But I told her later when it increased in value. But unfortunately, I bought only one. But it allowed me to start an interest in the blockchain space, and to slowly learn more and more until I stood basically without a job around 5 years ago, and looking for new career opportunities. So I basically selected the blockchain space as a kind of career path for me, and started together with some good friends to look for business opportunities and places where we could make a difference and add value. So we actually started different projects, but eventually found out that providing infrastructure for tokenization might be a really good niche to focus on. When we started 4 years ago, there weren't really any good providers in the space. The solutions were really, really simple, and we thought that we could potentially do it better. So we founded Sheraz, and basically as a kind of infrastructure technology provider to the tokenization space. We have a focus on real estate. Most of the tokenization projects we do are with real estate developers, but we also work with other assets today. But the basic value proposition that we approach, that we try to resolve, is to assist the real estate developers to modernize and digitize and automate their internal business processes in relation to financing new projects and the corporate management of the shareholder group over time. And then we also help them to make their assets much more liquid in different ways. One is through our own internal marketplace for trading internally within each project. Another angle is to collaborate with exchanges such as SDX, right? So tokenize on our platform and then listed on an exchange like SDX. So that's what we are working on. We have around 60 clients now, and we see huge demand. So even though tokenization has taken some time to take off, now it really is taking off. We see very strong demand, and it's been growing, I think, steadily for the last 2 years or something like that. Yeah, so I'll stop there.
Fantastic. Well, yeah, no, thank you. And yeah, really looking forward to hearing more about where that demand is coming from as well. So as the audience have been able to see, I mean, we have some incredibly bright minds speaking today. So feel free to just start picking their brains at any moment. If you want to write any of your questions in the chat box below, and I'm sure we'll be able to tackle them in due course. So maybe Klaus, you can kick us off here. And to my belief, I mean, a good one would be to shed some light on some of the differences in terminology here. I mean, we talk about tokenization, digitalization, and the likes. I mean, are those two synonymous? So they have different meanings? Maybe you can help with this a little bit.
Sorry, tokenization, and what was the other term?
Digitalization.
Yeah, good question. So digitization is everything you do to digitize a working process, right? A workflow. So just, you could say, the electronic signing of a document or a contract is a digitization of a workflow or work process. Tokenization goes much further than that, right? So we are basically building on top of securitization, which I think was very popular some years ago, where you have an asset, an underlying asset, like a real estate property, a hotel, or a hospital, or some villas. Then you basically create a legal unit that owns these properties, so you can actually issue shares corresponding to the ownership of those assets, and that's securitization, right? The next step then is to digitize the shares. You can do that using many different properties, like an exchange or in a bank and so on. You can digitize the shares and you can work with them in a digital manner. But now we're tokenizing them. That means we are actually representing the shares with tokens. So you can have the token in your own wallet. You can keep it in custody. You can have it traded on exchange. You can use it as collateral for DeFi lending. But essentially the share at the end of the day is represented by a token, which gives you a lot of benefits, because you can self-custody it and you can transact on it with it yourself in a peer-to-peer fashion with other counterparties, right? The blockchain technology allows you to do that extremely efficiently and in trade without counterparty risk and so on. So there's a lot of benefits.
Fantastic. Stefan, I feel like you want to jump in there.
And to highlight what Klaus said, I think one main characteristic of tokenization is to create unique, rivalrous electronic records. So that's a difference to just digitize it. You create a unique electronic record, which is able to exclusive control. So you can, I as a holder of this electronic can exclusively control the instrument. And I can also easily transfer the instrument by transferring the control. And I think this makes it a very elegant technology and basis in order to transfer any type of asset, from securities to other financial instruments, to real estate, as we heard, or to art or other use cases.
Fantastic. Thank you, Stefan. And maybe Stefan, on that note, and through FQX that you just recently mentioned before, the release of eNote, which is based on blockchain technology. Maybe you can tell us more about that innovation and the importance of it as well.
Yes, absolutely. So what we are leveraging is one of the oldest, most standardized legal instruments in the world, the promissory note, which is in essence an unconditional promise to pay. In German, for the German, maybe one of the other German person here, it's the so-called Eigenwechsel. So the instrument almost died out because you had the legal requirement needing a paper-based certificate and a handwritten signature. Nonetheless, you have, from a legal and accounting perspective, you have a lot of advantages coming out of this instrument. And what has now obviously changed in the meanwhile is the legal basis allowing now to issue those instruments purely electronically. And we at FKX, we're doing this based on either Delaware law or Singapore law. We're also now leveraging the new Swiss legislation, but the scope is a bit narrower in this regard. And then in essence, our main end users are businesses, and we have, for example, publicly listed companies issuing the instrument. On the investor side, we have institutional investors and buying the instruments. We also have, for example, Credit Suisse doing transactions by using eNotes. And the charm of the instrument is it's so generic. You can use it in loan scenarios. You can use it in a more commercial paper-like program scenario. You can use it as a buyer in order to pay your supplier. So then it's a pure payment instrument and not a credit instrument. And this is what makes the instrument very, very appealing. And then also it's a globally standardized legal basis. So you can use the same instrument in Europe, in Asia, in the US. and therefore it makes the whole case also very scalable. And having done quite a lot of tokenization projects, for example, if you're focusing on equity, then you always end up with one jurisdiction. You have certain specifics regarding this jurisdiction, specific requirements. And now focusing on a global instrument, you can really leverage also the global access of the technology. And we started with building up on a private DLT. So it was a hyperledger fabric DLT. We are now shifting towards public permissionless DLTs. And we just started with Solana, and we also support other or EVM blockchains. And then maybe as a last point, our users can then really choose the infrastructure on which the instrument should be stored. And you can either opt for super modern, fancy Solana, maybe on the one side of the spectrum, or you can, if you have also maybe more regulatory requirements, you can say, I do want to have it within a CSD. And then in regard to CSDs, I think SDX is a perfect fit because they're very efficient. They will also allow a direct settlement of the instrument, so not T+2 in a very easy and elegant manner. And so therefore as said, we're very happy to be able to work together with SDX.
Yeah, fantastic. And maybe we can talk a little bit about that partnership as well, and maybe kind of, let's say, unravel some of those maybe kind of complicated acronyms that you just mentioned as well, to kind of ease it on the audience a little bit. So yeah, and so maybe Patrick, you can tell us more about this announcement with FQX and SDX, and kind of the importance of SIX's involvement in digital assets as well.
Yes, very happy to do so. I would maybe just like to go one step back and just pick up something that Stefan brought up, something that is very important. The legal aspects, they can only be underestimated. When we talk about tokenization, then we tend to think just about it just in technology terms, saying, yeah, I tokenize this, I tokenize that. Technically, that is not necessarily a very difficult thing to do. However, making sure that when you have an asset, or when you're an equity holder of a specific company, then you have to make sure that the token truly represents and holds all the rights that are attached to that holding, right? To make sure that you can really exercise your right and that they're undisputably exercisable when you are, let's say, the owner of that token. And that's not always so simple, and it's in many cases not a technical question per se, because there's law that predicates some things, and that are let's say that is the legal foundation for what we do. So what Stefan said is that the nodes that are based on a global right, sort of, that's very, very important, because that means you can scale it, right? Whereas if you are talking about asset tokens, let's say equity tokens, when you look at the legislations, then these legislations actually vary from country to country. So there is no such thing as a one size fits all. So it means you have to still adapt in some way or shape to local law. And therefore, and I just wanted to bring this point across. I think technology in many cases is already advanced, but there's some boundaries that, let's say, prohibit the full or exploit the maximum use of this technology, because there's still law, there's still regulation in some way or shape, and well, that will not go away, right? And in most cases also for good reasons. Now, with that, let me just bridge to what SDX decided to do. So we are a 100% subsidiary of SIX, and we started in 2018, realizing that there's a lot of change to come that will hit capital markets and the way things are done, the way assets are represented, et cetera, et cetera. By design, we sort of determined that we want to start in the regulated corner, right? So we could say there's the open blockchain area, and there's, let's say, the permissioned area, fully regulated. we said we start here, not claiming that this is the only way or the only right way. It's a way. And the reason for that is we wanted to sort of build an infrastructure that existing capital market participants can actually connect in good faith. And so we want to make sure that we are a trustworthy infrastructure that is regulated, that has full oversight from our local regulator, FINMA, and by that also demonstrating that we comply with all the security requirements, cyber risk, etc., etc., etc. So that comes at a price. That means there's certain things you cannot do. And let's say you have a bit less flexibility in terms of which assets or asset tokens you can then bring on the platform. But we thought it's worth the price to, let's say, start with equities and bond instruments or fixed income instruments and start from there. And of course, there are many other corners or regions on the landscape, like the NFTs, et cetera, that we don't have readily available. But as there's a commercial demand from the market, we would be adding that, of course, right? But time will tell, and there will be a sequence of new asset classes that we add. And yeah, so and also to maybe close the loop, the security tokens or the asset tokens that could be either equities or bond instruments. Technically speaking, these are the tokens on Corda platform that we are using. Legally, these are intermediated securities, right? It's a well-trusted legal concept in Switzerland. It's intermediated securities. So if you look at the Nestle shares, for instance, these are also intermediated securities. So we wanted to make sure that the institutional players in the market feel safe with what we do, and sort of also then accommodate them with the technology that we are building. And then over the years, then very, very likely this will open up and go in many new different or additional ways, harnessing other asset classes, other platforms, etc., etc. So the cooperation, the work we're doing with FQX is actually something that I consider a very good fit, because when you look at the asset life cycle, there is a point where you do an issuance. So when you create a token, and then there is trading and life cycle management. So there could be coupons, there could be dividends, there could be anything of that sort, right? And this, for some instruments, there is a maturity. What we do not have actually on our platform right now is everything that is pre-issuance. So when the instrument is being designed, when you do book building, when you do all of that, right? When you sort of write the prospectus or when you describe the asset. And this is exactly where FQX comes in. They have a very neat platform and they really complement what we already have, right? And so that's sort of the key connection. And if you think of the FQX platform as a platform that really creates new tailor-made assets for specific needs, then they could then in a seamless step enter the SDX platform, where they can be made available for all those that are connected to SDX. Mm-hmm. So that was a very long, short summary. Sorry for that.
Very insightful, really, and I think that bridges well onto another topic, whereby, of course, the digitalization of financial products like these. I mean, it's an important step for this technological revolution, but we can't forget kind of real world assets too. And I mean, Klaus, you spoke a little bit about these before, and I know that you've been working on a lot of real estate tokenization for some time now. I mean, how does that asset class compare to what we've just been speaking about?
Yeah, well, I have to say I fully agree with Patrick. Just today, actually, we spoke to a client and they call us a legal tech company, right? Even though we only have one legal guy and 15 software developers, but it just highlights the point that we are so influenced by regulation, and everything we do is influenced, and a lot of it has to be compliant. Everything we do, we work within securities regulation, right? So even though we have one legal guy, we have 40 legal partners around the world in order to carry out our projects, right? So there's a lot of legal effort going into this, and it's also still making it quite expensive to tokenize in many geographies, because there is a legal bill to pay as well. In many cases, you have to interface with a regulator in a sandbox process, or at least to discuss with them and notify them what you're doing and get some kind of permission. But it's moving forward, I would say. So more and more jurisdictions are opening up to tokenization, and it's becoming clear and clarified in more and more countries how you can actually tokenize. So we like to work in the US because it's one big country, and the regulation is the same all over the country. So we see the US currently as taking the lead in this space. If you use a Wyoming-based company to tokenize, you can use the tokens in all the other states, and it's a big market. So that's also where we see the biggest interest and the most interesting projects right now. In Europe, it's a much more fragmented pattern. It's a patchwork of regulation in different countries, but the European Union bringing in regulation and sort of converging over the next 1 or 2 years, I think for sure. And currently Germany taking the lead, I think, for the most forward-looking regulation in the space, and we have a German subsidiary, so we are also trying to be close to what is happening with the law, and to make sure our customers can stay compliant. The way that we operate when we tokenize real estate is, as earlier mentioned, to tokenize an SPV, a legal unit that owns the property, and then tokenize the shares of that company. Tokenizing the shares is from our perspective the easiest to do right now, because a share is well understood in the regulation, and many regulators, or at least some regulators, view tokenization as just a way to digitize the share, and that's already supported to some degree or even completely in many countries. So the token is just one step further, where you actually have a token that represents the share. It's not equal to the share, but it represents the share, and it allows you to update the share cap table, which is then the legally valid indicator of where the ownership resides. So that we can work with that approach in the US, in Denmark, and in more and more countries. But it's developing all the time, and it's a moving target, and we have to spend a lot of time on it. But I think it's moving in the right direction, where the regulators, in many cases, choose to see tokenization of securities as just a digital version of the securities, really, and nothing special in addition to that.
Klaus, I have a question, if I may. So when you say you're actually tokenizing the shares that holds the building, or let's say there's this building, what would it take, and what would it, and how long would that take to, let's say, tokenize that building directly without the use of this SPV in the middle? Let's say, okay, this is the building, and now let me represent that in a tokenized form on a chain. Are we getting there? And
not yet. Not yet. The problem with that is that you have to tokenize then some kind of investment contract around the building, being linked to the title of the deed, and also potentially having to integrate with a land title registry, which is not digital anywhere in the world. And you have to convince the investors to read and understand this very long investment contract regulating value appreciation, distribution of income, and so on, rather than just selling them a share, which is a recognized security. So we see a few companies looking at it this way, and I think that it will come in the future, right? But it's too early, I think, now.
Thank you.
That's too early. I feel like that's a sentence we've been hearing for the past couple of years at least. I mean, Stefan, maybe you can comment on why you believe it's taken so long, and maybe even not so long. But I guess in the crypto space, everything moves so quick, so it feels long to me at least.
I think one aspect has been mentioned, that so one requirement and basis which is needed is the law. So especially for security tokens and for tokenizations, you as Patrick said, you need a proper legal basis. Otherwise, just do it technically, it's not sufficient. So we needed a while in order to have the proper legal basis. And now I think it's also a bit of a hurdle to convince more traditional businesses, for example, to use DLT, especially in our segment. So if you're focusing on even publicly listed companies, so it took a little bit of an effort to convince them to shift towards using DLT. Now, in the meanwhile, it works very well. So therefore, this was also a hurdle which we had to overcome. And I'm very much convinced that the tokenization will be more and more important. I think one additional aspect is also that you do not only need the title side, you also need the money side. And now we have more and more stable coins. We're even discussing CBDC. And if you have then both the title and the money, and you can very efficiently directly exchange the instruments, then it's all the more interesting. So I think this was also an additional driver we now have. And therefore, I think there's a huge potential in various areas. I absolutely agree. Real estate is kind of the one main topic. In the more property area, I think nonetheless financial instruments in general are very efficient, and it just provides a tool to very efficiently and directly transfer assets, be it in a B2B model, but also in a peer-to-peer B2C model, so in a full spectrum. I think the only aspect which might be a bit worrying is the regulation. So we also see now that more and more regulation is coming. Not all the regulation is going into, at least from my perspective, an optimal way. It's also a lot of education needed in order to teach those people then creating a regulation, that they understand how the technology works, what the use cases are. And we see it in, we had the European Union had the discussion this week. There are projects like the Basel Committee foreseeing very high capital requirements for financial institutions holding any type of crypto-related assets. We also see more and more regulation at the gateways between crypto and fiat, so that in the future you might not be able anymore to switch fiat crypto towards fiat if you're not based on a fully white-listed KYC wallet. So here this is the challenge to find the optimal amount of regulation.
The optimal amount. But that's a bit. I mean, Patrick, SDX they got their regulatory approval last September. I mean, how have you been progressing since that part? I mean, I'm sure that has opened a lot of doors since.
Absolutely. Look, the Swiss environment is a very supportive environment. We had that was quite a long journey to actually talk with FINMA and our home regulator to finally get the approval, and they just did the right thing. They wanted to understand how we are applying the technology, making sure that it's waterproof, and that takes some time. So that was an investment, and no, let's not forget. The last time they let's say approved or gave the approval to an exchange or of that sort, that's probably about 2 decades ago. So right, that's not something you do every week or not even every year. So yes, this has opened doors, but that as all these platforms, and I think as we figure out, that was just the birth of the baby. Now there's this potential out there that we can now start exploiting, but that's not really. That takes a bit of time. So we have onboarded to the platform already Credit Suisse, UBS, and Zurich Cantonal Bank, and of course we will be adding other banks or other financial institutions to grow the network. So that's one dimension, and the other dimension is adding new or actually more products and adding more assets, etc., etc. So that we just did the start. We just came out of the gate, and look, the requests or the ideas that are coming toward starters are actually enormous and super interesting. We just talked about the before. And what I realize is really, there's now a bit back to tokenization. When you look at the blue chip equity markets, for instance, there is that interest is not really that high, at least not for now, because these markets are already highly efficient and highly straight through. And yes, they can be that there's still a couple of things that can be done better, more efficiently, like the corporate actions handling and these kind of things. But that will take some time. But these markets on the trading side, they are facilitated in sub-micro or sub-millisecond time frame. So a technology that is based on DLT is not yet that performant that you could really facilitate transactions at this lightning speed. So where I see the most interest is really in the private markets area. Right, the things that are not publicly listed, or let's say at least less frequently traded. So, and I think there's where technology, including us as an infrastructure provider, can add a lot of value. Those areas where we have capital markets not yet organized that efficiently, where things are paper-based, where they function manually, where you have your holding on a piece of paper in your safe, but there is no account statement at your bank, so there's not a holistic view on your wealth, and all these kind of things. And I think the private markets, be it private debt, be it private equity, that's where I believe we will see an enormous growth over the coming years. Very difficult to predict the exact order and speed, because we know there's that we have an environment that we have and want to comply with. But based on the interest I see, I'm sure that we are going to see a lot that will happen.
Exciting. I mean, you spoke a lot about the financial institution side, right? Big banks, UBS, Credit Suisse, Zurich Cantonal Bank. But what is your perspective on more the retail audience, right? In terms of, I remember back in the day when I was sold the dream of tokenization, it was for anyone, anywhere to buy anything, right? And that being even with 10 francs in their pocket. Are we approaching a reality like this at any time soon, or are these kind of illiquid assets going to become liquid only for institutions?
Yeah, that's a good question. Look, I can now, for talking for STX, or the way we are set up, at least for now, I don't know how, I don't have the crystal ball seeing the future in 5 or 10 years from now. For now, because we are regulated, only regulated financial institutions are, let's say, eligible to connect to this network. Let's call that through a wallet. We call it a node, but that's a requirement today. That could change over time, and it probably will. And on the other side, you have the public blockchain, right, where actually everyone could have a wallet. In our case, because it's a permissioned blockchain, this is not the case. But therefore, I say this is a starting point in sort of this walled garden for now, but in a very controlled and let's say high quality and institutional grade way. There's the public blockchain space, right, where you have a different environment, a different community and different ideas. Most likely over time, these are going to converge, right? We are going to learn from the public blockchain space, and public blockchain space will probably adopt some concepts from the regulated space that have proven as valid. And the speed at which these are maybe going to converge, that's open, we will figure out. And by that, maybe let me add the thought that even though the cryptos are out there for now a bit more than 10 years, I mean, at least in the case of Bitcoin, when we look at asset tokenization, my personal view is all of that is still very early. It's still very young, right? And we are not really very far in that journey. So I would say all the funny and really interesting things are yet to come.
Okay, it's interesting. You spoke about convergence, right? And that you're regulated, so you can only deal with regulated institutions. So are you saying to a certain extent that being centralized in that manner allows you to operate with those entities. But then, for example, decentralized exchanges, some projects such as Ravencoin, for example, operating tokenization in a decentralized way, allowing the offering for retail audiences will kind of, they will have their market on that side and you will have yours, and maybe there'll be some overlap, but the ability to kind of trade these assets will be on one exchange for some, and then on another for another audience type. I mean, Stefan and Klaus, please jump in, or Patrick yourself, but yeah, just intrigued to hear.
But maybe just one thought to that. When it comes to the assets traded on SDX, of course, private investors or corporates, they can actually trade these instruments just through their banks, not directly, let's say, through their wallet. So, right, everyone that is connected in that network, the private investors, they can access these instruments, right? So it's that is open, but you have to be connected to the network in some way or shape. I think the other point you brought up, Sheraz, is about interoperability. And to me, I would say that's the $1 million question. And when you think about interoperability, also here, it's quite easily said, yeah, let's make this up interoperable. Let's say, let's connect this and this network, and then everything will be fine. But the devil is really in the detail. And when you now think about, you have a node, let's say an e-node, just as an example, and there will be there's a coupon that is going to be distributed. Now, when you have this coupon, let's say, hop over a couple of networks, then you have to, really have to make sure that it really is disseminated in a perfect way. Otherwise, it could be that some do not receive that coupon, others might receive it twice. A part of that coupon could actually disappear in nirvana, and then you are bearing a lot of legal risks, right? So the owners that are expecting that coupon from you, maybe on the third network, they would then, hold like a claim probably against someone saying, hey, you owe me some coupon. What I want to say with that, my personal opinion is interoperability, until it's really investment grade, will probably still take a while.
And
it's easier said than
done. I fully agree. Also, specifically in regard to this aspect of interoperability, it's a word which is used quite often. But as you said, we really have to go into details in regard to the different types of exchanges and also the allowed participants. From my perspective, there's definitely room for both. On the one side, you have SDX, which is fully regulated, providing all the services relevant for banks, those institutional investors. You have everything you need, you fulfill all your regulatory requirements. It's nonetheless very efficient. So this is one segment. From our perspective, we also provide the possibility to directly issue and store the instrument even on a public permissionless DLT. So for an other type of audience having other requirements which might do directly exclusively control the instruments by themselves, and there you then of course also have other trading platforms. In regard to the law, we also see a certain shift there. Switzerland now introduced the DLT trading facility as a license category. The difference there with this license is now it's now also allowed to have up to retail clients and investors as participants. So we also see this certain tendency from a legal perspective towards more open, more decentralized systems.
Can I comment? Can I comment also on the retail investor angle?
Please.
From our perspective, it's really a no-brainer that the retail investors will come into the space big time. As it is right now, the retail investors really don't have access to invest into real estate, which is our primary focus, right? I think it's less than 2% of the global population that is invested into real estate, but industry reports indicate that it's more than 50% that actually would like to do it. They just don't have the access to it today. It requires in Europe like 100,000 euros and upwards if you want to invest in a real estate project. And you can, of course, you can trade a few of them on the exchanges, but it's only a very limited amount of assets and properties that are available. And typically, if you go into a real estate investment project, you will be stuck with your investment for 6, 7, or 8 years. So there's essentially no liquidity, right? So I think the tokenization activity that we are all focused on will resolve that matter, and will allow the retail investors to come into the space. That they haven't done it yet, I think, is more a matter of awareness and education. They have to find out that they have the option, and they have to have some goods on the shelves in the stores, right? There has to be some available assets for them to actually invest into, and maybe also some successful cases, right? So it's going to take some time, but it'll come for sure.
Fantastic. Well, I think we're kind of getting into the core of the webinar today with only just over 10 minutes remaining, which is tokenization going to be the next wave of mass adoption, or are there elements to that? I mean, maybe the next wave, which is a little bit further away, but I mean, because before entering the webinar, we were discussing a little bit about the metaverse and potentially its implication within tokenization. I mean, what are your thoughts on that area?
Yeah, I think the metaverse is a huge buzzword, right? I would say first and foremost, and has been so for a while now. But I also think there is something tangible behind it, right? I think there is a real business opportunity for all of us, and there are real use cases also that will be seen in the future as virtual reality and so on becomes better and better and better. So there's no doubt we cannot just ignore it. We have to look at it as a new way of doing business, and as a way to sort of stay relevant and develop new areas of our business. So from our perspective, we are looking very much at the idea of creating digital twins of real physical properties, and using that potentially as a kind of ownership indicator of the real physical property. We are exploring that together with a few clients. So I think this is definitely something we will see more and more in the future. So from our perspective, it's quite exciting and will potentially be of real value.
Fantastic, thank you. Stefan, please, I can tell that you're going to say that it is the next wave. At least I hope so.
Thanks. Yes, you're absolutely right. It is the next wave. Also, what makes it all the more interesting is that it's not only about tokenizing an asset. So you're not just digitizing, making an asset tradable. It's you have also below this asset a super efficient infrastructure, and tokenizing an asset also lies automation of a lot of processes. If you, for example, tokenize an equity share of a company, you can then very easily directly do, for example, a general assembly, all these voting mechanisms. If you then start tokenizing, for example, a fund share, you can also build up a very efficient voting model on the top. And then you really see a much bigger picture, and there is a lot of room and a lot of potential in this area. Wonderful. So this is what it was, the more or less short yes.
Thank you. Patrick, what are your thoughts?
I think I think it's mind-boggling, right? What's lying ahead of us. There is just so many still things that can happen, but there will be also interesting side effects. And you alluded to that, Klaus, when you think about the metaverse and when you talk about physical or think about physical things. Maybe one way to look at that, if the more you are going to tokenize physical assets, it could be as small as this pen, it could be as big as, let's say, maybe a car or a painting. Something that will be required then in this new world where you have more of that tokenization is custody, right? So we sometimes tend, or we should not forget about these very basic services that underlie this new metaverse when you are tokenizing things. Because if you are tokenizing that car or this picture, someone needs to make sure that it's being taken care of, right? Because someone else is holding the right to this object. So I would say maybe as a business opportunity also, think in this new world, but don't forget the traditional qualities of the stuff we do. So even there could be good business opportunities. And yeah.
Quick comment to that. So there's been a lot of projects done with NFTs, and they haven't been taking good care of the custody angle, because now we see actually a lot of cases where the NFTs are somehow disconnected from the underlying asset because there isn't a carefully sought out mechanism for how to keeping that link available and even for making it compliant, right? So yes, I agree very much.
No, very insightful, and we have just 10 minutes left now, and I mean, I did mention that we were going to allow our audience to ask a few questions, and they have in the chat box, and I'm more than happy to unmute any individual if they want to kind of join in a little bit of kind of like a Zoom clubhouse in a way, if they have any questions. So feel free to ask them in the chat. We did have a few here, and I'll just try and like pick one or two. So we spoke a little bit about Switzerland. Klaus, you mentioned that you've been operating a little bit in Singapore and in the US, and now slowly into Switzerland. Both Stefan and Patrick were both Swiss-based. Here, Kieran is asking, are there any upcoming developments regarding regulatory finality in Switzerland that would be helpful for us to know? Anything to look forward to that Switzerland is preparing regarding tokenization at all to your awareness?
Not that I'm aware of.
I mean, what was introduced last year was the DLT register securities, allowing you to digitize, tokenize various assets, including physical ones. What has also been introduced is the DLT trading facility as a license category, which is also a useful tool for secondary market platforms. Then Switzerland also adapted one or the other additional provision, which is just helpful in practice, like the segregation of assets or crypto assets in bankruptcy proceedings, so that we have, compared to Switzerland as compared to other jurisdictions, quite a good legal basis in regard to DLT. Nonetheless, there are also in Switzerland quite some, a broader range of questions are still open, but it's also a new and highly evolving topic.
No, I understand. I mean, maybe let's flip the question on its head and say there might be some regulators, authorities in the webinar today. I mean, what if there was something that Switzerland could do to become either more competitive or more open to the tokenization world, the security token world? I mean, what could they do at the same time? I mean, taking into consideration there needs to have some layer of protection, etc. I mean, what would you suggest to them if they were right here in front of you today?
Thanks. So from my personal perspective, the collaboration with FINMA works very well. So they're very open. Of course, it could take a little bit less time, as always. Nonetheless, they have a very elegant procedure. And then I think specifically in regard to tokenization, we have a really good basis here, allowing a lot of tokenization mechanisms. And we have even more legal certainty now for tokens representing other assets than for native and payment tokens. So therefore so we had a specific focus on this. I think the only disadvantage specifically in Switzerland is that there is no passporting if you need a prospectus. So there's no passporting with the European Union, which is a disadvantage if you have any type of B2C constellation.
I would actually just I agree with this. I fully agree. I think the environment we have in Switzerland with FINMA is super constructive, and I think many other countries would envy us for that. But anything that is about cross-border, right? These kind of things, they have been with us and they will remain with us. That just does not go away. So there's only, I would actually chime in with what Stefan said, there's only so much you can do here when you actually want to branch out of the Swiss market and harness, let's say, the surroundings. Then it's always the cross-border aspects that would come in and come into play. Yeah.
Okay. Understood. Thank you. And maybe this next question is for you here, Klaus, from Paul. And it's related to real estate tokenization. I mean, who is accountable for the maintenance of the physical real estate? I mean, you sell the tokens, that's all fine and dandy, but the actual asset, I mean, where does the maintenance come from? I mean, how is that person paid? I mean, how does this work in real life?
It's the same as in real life. So again, you'd have some kind of SPV owning the property and potentially also having a budget for the maintenance, the ongoing maintenance and staff for that, or using a service provider. And then you tokenize less than 50% of that property, right? So you still keep the management of the property in the hands of the issuer. So that's a typical scenario, right? You can also sell off an entire asset, and then, of course, the responsibility to manage it will cross over to someone else. But it's similar to real life. It doesn't make a difference to whether you tokenize it or not. On that perspective.
Fair point. It's the same virtually or in real life. Fantastic. And so I think John has another question here, which is quite an interesting one. I mean, how secure is tokenization, and can the tokens be hacked? And maybe if I add a caveat to that, in terms of if there was a hack and the tokens were taken by some hacker, I mean, I'm guessing that doesn't necessarily mean that they can appropriate that piece of real estate at all. I mean, at least I hope. I mean, what is your perspective? I mean, Klaus, is it secure? I mean, how does it differ?
It is really secure, and I can guarantee that. The reason is that to have security tokens in your wallet has to be whitelisted. So you have to provide your ID and go through KYC in order to even keep the token in your wallet. The token is self-regulating and self-governing, right? So it just doesn't allow to be transferred into a wallet that is not whitelisted. So first the thief or the hacker would have to be whitelisted with a wallet to be able to receive the token or somehow transfer it into their own token. And even if that was possible with a fake identity or something like that, the manager or the issuer can still override it and burn the tokens and reissue them to the correct wallet. And this is required. You can't do this with Bitcoin, right? But you can do it with security tokens because they use special protocols that allow this functionality, and it's required by law because it's a security.
Okay, hopefully there's no rogue property owners that just sell the asset in tokens and then decide to burn everything and keep the asset.
That's another matter,
but I do understand John's skepticism here in terms of, when it comes to kind of tokens, everyone or a lot of people that I know that bought Bitcoin is like, but it's not really tangible, it doesn't exist, how can I really trust this, right? And I mean, Stefan, Patrick, do you have any thoughts on kind of like how tokens representing real assets can kind of portray themselves in a more trusted way to audiences that might not be aware of some of the things Klaus mentioned?
I think I agree in regard to what Klaus said. It is very secure, and it has to be secure on a technical layer. It has to be secure on a legal layer, and then if you combine these both aspects, then you have a very good basis. And as Klaus also said, if you're dealing with asset tokens or tokenized assets, then you have more possibilities. Also, if you, for example, lose the asset in certain laws, as for example the Swiss law, there's even a specific procedure foreseen, a so-called annulment of the instrument, that you received a new one. So here in this area of assets, it's even more secure compared to other more native digital assets.
Okay, very interesting. Fantastic. Well, we're just about to wrap up here. I mean, thank you so much for taking the time. So I think some really interesting insights. I hope our audience was able to benefit from all of these. Do any of you have any closing remarks for our audience today that have been listening so attentively to what you've had to say?
I already provided mine that we will see a major increase in tokenized assets. So I'm looking forward to it.
Thank you.
I think, very brief for me. I think it's important for anyone, if the startups, but also institutionals, larger companies, to be exposed to this and try to learn what it is about and form a business strategy around it to avoid getting potentially disrupted in the future.
My words, Klaus. Thank you for that.
Sorry.
Wow, well, great. Ditto, and it's been amazing once again having all of you. So thank you so much for joining one of the Crypto Valley Association's virtual series. To the audience, I hope you really enjoyed the session here today. I definitely did, and we'll have more sessions coming up in the following weeks and months. And of course, the Crypto Valley conference that is going to be in a few months' time. So make sure you listen out for the announcements related to that and everything that is to come. But yeah, in the interim, have a great evening. Thanks once again to Klaus, Stefan, and Patrick for joining us today.
Thank you very much.
Thanks a lot.
Thank you.
Thank you, guys.
Thank you. A great evening.
Good evening.